I'll take you back to the stochastic oscillator. It's not very difficult to understand how this oscillator works, but just the description. It's a technical momentum indicator that compares a closing price to its price range over a certain period of time. Now this period of time can be up to you, depending on how long you want to be in this investment. So this can be set to by the minute, by the month, by the quarter, or by the year. And this tells you exactly what the momentum of the price is doing. So as you can see by the yellow dots, the little down portions of the share price normally coincide with the period where the share happens to be overbought, and vice versa. When a share starts turning up out of oversold territory, the share price generally tends to move up. So this also helps you gauge a better point of entry, because it would be kind of silly to buy a share that's been trading in an overbought range for a while. So typically what you would do is you would wait for it to come down a little bit, wait for the stochastic oscillator to come out of its oversold area, and it'll give you a better opportunity to buy. And that way you're going to make sure that the momentum is on your side. And after you've gotten the entry into your investment, then the little dips and the peaks and the troughs after that won't matter, because if you've already identified the trend, when other investors are getting out of the little bounces, your investment is still growing over time. So don't let the little dips be your reason to get out of a good trade. This is just to give you an indication of where you and your investment lie in the trend. And it gives you a good idea of where you are in the cycle. So let's just recap. When picking stocks for your investment, you need these basic technical indicators. Trend. Identify the direction. That's number one. You only want to get into stocks that are going up, not ones that are bouncing up and down or even going down. Support and resistance. Support is where we buy. Okay? If you identify where this price is supported and where people are possibly going to sell it, you're a long way or a big step ahead of the curve. You should be getting in to where other investors start seeing value. Okay, then the moving average, the 200-day. Let's see how sick or healthy my investment is. What do other investors think about this stock? Because if other investors don't want it, I don't want it. And that is what the 200-day moving average tells you. Okay, and then the stochastic oscillator. Identify if the momentum is on your side so that you don't get in too early or don't get in too late. You only buy instruments or stocks or securities that have demand. Once you have something that's in demand, there's no other way for it to go than up. So guys, I hope that this has added value, and it has definitely to profitable investing. And if there are any questions, I'm happy to sit and answer some of the questions you guys might have, whether they be technical or fundamental, or regarding how these technicals can help you with your investments.